Hey everyone, and welcome to my channel. My name is Yusuf, and I've been a full-time day trader for 12 years, and I've mastered the art of understanding price action. Now, the edge of understanding price action is you're trading with the market, not against it. You're following trends, following corrections, you're understanding where consolidations are happening, and when a reversal can occur. Now, I look at it as like a compass. You're not going to have the exact route, but it'll at least guide you to where the market is heading. Let's dive into it. So we are currently looking at ES and we are looking at the 2000 tick chart time frame, which is very similar to the 1 minute. The only other indicator I use is the 21 EMA, which is this purple line, and I'll explain later the importance of it. I start my trading session by zooming out and identifying the pre-market lows and the pre-market highs, which I have labeled here. So let's identify the market structure. So as you can see, we are bearish. We have consistent lower lows and higher lows working continuously down. I start my trend line by looking for where the move started up here. And I draw it geometrically to fit along with these candles. So as you can see here, I started up here and we have some confirmations. When I say confirmations, I mean by the candles touching it and rejecting. The more the better. I usually like to look for two, but just because this was such a strong downtrend and it's barely breaking above EMA, I just drew it like this and it fits great. Now, according to price action rules, once we get a break of a trend, we expect a new extreme to be tested. So in this case, we have a nice downtrend working lower. We broke it here, so we expect the new low to be tested. Let's say in a scenario where it didn't break above the trend line and it respected it and we continued going lower and lower, that is where you can continue looking to go short because the trend line hasn't broken and there is no need to look for a reversal. So once we have this downtrend breaking lower and lower, I'm gonna draw this out for you guys. We have a break here, so we expected a new low to be made. Now, I use the 21 EMA almost as like an indicator of what's going on. Let's say, for instance, we had a huge break above it. That usually means we're going to have a longer correction. And you also have to draw the smaller corrections. So as you can see here, I'm going to draw a smaller correction because we don't want to get in while the bulls are still in play. So over here, we had a break of the small correction and a new high. This is safe to me now that the bulls are out and I can look to take a short position. So we broke lower. What I usually like to look for is a candle that breaks higher than the previous bullish candle and reverses lower. In this case, it didn't, but if we zoom out a little bit more here, it ended up happening here. As far as entries, I'm going to make a whole video for that. It's not complicated at all, but as far as time goes, I'm just going to focus on just an introduction to my strategy and how it works, just so you guys could have an idea. But it's pretty simple finding the entries. The hardest part is just identifying the market, understanding when the correction is over, and waiting for entries is the simplest part. So as you can see here, we ended up breaking and we made a new low. So now that we made a new low, either two things are going to occur, a consolidation or a reversal, right? So we're just going to wait patiently for price to develop. As you can see here, I'll move this down a little bit. We entered a consolidation phase. There's nothing we can really do here. We can't go short. Price already broke and corrected. We can't go long because we really don't have a nice uptrend in play. So we're just going to wait for this consolidation to play out. And as you can see, slowly but surely, we started working higher and higher. So when I saw this, I started looking for an alternative channel. And as you can see, this fits perfect geometrically as well. We have one, let me fix this a little, 2 points of confirmation. So now we have a whole new market cycle. After we broke, we made a new low. Now we're trending higher, right? So we're trading with the market, not against it. Now, what are the price action rules? Once we get a break of this trend, we expect a new high to be made. Now, let me make this clear. As long as we're within this channel, we can continue looking for long opportunities. The only time we stop looking for long opportunities is once the channel breaks, we correct and we make a new high. So as long as we're in this and it hasn't broken yet, so like over here, we can start looking for long opportunities. But as soon as it breaks, as you can see here, breaks under the trend line and we correct and we make a new high, that's when we pause. So this is another great example. We had a nice uptrend in play, we broke it, so we are expecting prices to make a new high. So as you can see here, we pushed above the EMA, and the EMA is usually the only area where I'd look to take a position. We broke above the EMA. We had a nice juicy green bar here. It reversed lower than the previous bearish bar, trapped all the bears, closed up, and this would be a great entry. And as you can see, slowly but surely, we made a new high, and this was about almost a 16-point scalp, which was a couple $100 if you took it even with one position size. So as soon as we broke and we made a new high, what do? Do we look to go long? No. We wait for two things, either a consolidation, reversal, right? And sometimes the consolidation can result in a continuation. So here we ended up breaking, making a new high. We started slowly kind of trending higher, but as you can see here, we are forming a resistance, which I don't like. I like looking for aggressive higher pushes, but slowly but surely we started going higher. There's no signs of reversals. So what am I going to do? I'm going to look for an alternative trend. Now, let's say we widen this trend like this. You're not really getting many confirmations because you want confirmations as well from the bottom, right? Like when I'm drawing a trend line, I look for many confirmations at the bottom to start and align it as we're going up. But if we draw it like this, we're missing this confirmation, we're missing this one and this one. So when this usually occurs, I like to look for something called a spike in a channel. So we're going to look for a spike in a channel now, something that we can get multiple confirmations. We're not leaving out any other um, pivots, right? Because we want to make sure we're getting as many confirmations as possible, not leaving any space or room out. Space is not good. So this fits perfect, right? Why? We have 1, 2, 3 confirmations. There's not a lot of space compared to here. So this is going to be our new uptrend. So as you can see, we are looking to take a long position. We ended up correcting over here, right? And it was a small correction. We ended up breaking and making a new low. Now, guys, when you're looking to take a position, like in this scenario, we're looking to take a long and we have a downtrend in play, you have to wait till it plays out and you get a new low. It's almost like the same rules we have here, but on a smaller channel, right? So over here, we ended up having a downtrend. We broke above it and we made a new low. What does that mean? It means it's safe to look to take a long opportunity now. Where do we look to take a long? Above the EMA, the 21 EMA, this purple line. So we have an uptrend in play. We had a break of the uptrend. So what do we expect? We expect a new high to be tested, right? So we ended up having a mini correction, break, new low for the mini correction, strong push above EMA. And guys, once the EMA is almost like your friend, it'll tell you what's going on, if it's safe to take a trade. If there was a rejection at it, you can start looking for more confirmations, but we sliced through the EMA, right? Sliced through the EMA, this big bar over here ended up reversing lower, trapping the bears, right? We call this a higher low and closing higher. This would be a great opportunity to take a long. The only reason why during this trading day I didn't take it is because it closed at the highest of the move, right? We want to enter low. We don't want to enter too high. So if it entered just a little bit lower and the body was a little bit closer to the EMA, I would have taken it. But just the fact that it's literally closing and it's the highest move, I kind of avoiding it. It's almost like the buy low, sell high analogy, right? But usually I like to look for, something a little bit closer to the EMA, not closing all the way at the top. You still ended up getting a couple points. It ended up reversing again. Even though it reversed and we're back under the EMA, we still expect prices to test a new high, right? So what did it do? It ended up pushed higher and it made a new high, as you can see, right? It didn't give us any confirmation entries because usually we want something like this, a confirmation at the EMA. We ended up just pushing higher, no room for entry, and we made a new high. So let's zoom out and let's look, right? This all is almost like a puzzle that just comes together, and these are rules that the market will respect, I would say 90% of the times, unless there's news or some other influence that will change the market direction. But as far as price action goes and the rules, you can see here we had a downtrend working lower. What happened? We ended up, and let me zoom in so you guys can see. We ended up breaking it. We ended up breaking the trend. And what do we expect? We expected a new low to be made, which was made. After that, we waited for the next market cycle. We ended up trending higher and higher. We found a new uptrend. We ended up breaking it right here. And then what happened? We made a new high according to price action rules. So when you see this, especially in real time, it just makes so much more sense and it convinces you, wow, like the market really respects these rules. I'm trading with the market, not against it, waiting for the corrections to play out, waiting for the consolidations to play out. And in my opinion, this is one of the best strategies. I wouldn't even look at it as a strategy. I look at it almost as like a market guide because the market respects and follows these channels, right? So after this break, we made a new high over here, right? So we ended up just consolidating. A good thing about the EMA, it lets you know what's really going on, even in real time. And when the candles start getting bunched up and the EMA goes flat and the candles are in the middle of the EMA, this is an indicator that a consolidation is present. So compared to, let's zoom back a little bit. If you watch the EMA here, you can see the candles are under it and they're respecting it. They're not in the middle of it. Here, we're in a consolidation and the candles are in the middle of it, right? Next market cycle over here, we are in the middle of the EMA, but we are making higher highs and higher lows. So this is what you call an imbalance, but it's not like price action is going completely flat. No, we're going higher and higher, as you can see, and the lows are also going higher. So in a situation like this, yes, the trend is still valid and you can still look to go long. But here, prices aren't really choosing a direction. We're just having price swings up and down. We're not making higher highs or lower lows. It's just indecision, as I call it. And you can just draw a consolidation, something like this, and you can just wait for the market to choose a direction because the upside played out, the downside played out. There's nothing really going on here until you wait, right? And once you wait, you can look for a nice market push like this. As you can see here, we had a nice strong market push out of the consolidation, out of this cluster, out of this mess, so we can resume looking for another trading opportunity. As you can see here, we have a nice strong uptrend in play, right? And I drew a nice downtrend fitting all of these candles and the pivots from the bottom. And what are we looking to do now? Well, we have a nice uptrend in play, so we're looking for a long position, right? There was no entries here. We ended up breaking through the EMA, which is totally fine. You just have to wait for the small corrections to play out. Um, you could even count this as a small break and in a new low, right? And what did we end up doing? We ended up pushing back above the EMA and we made a new high. And let's go back to the rules. What are price action rules? When you have a trend in play, right? Once it breaks the trend, what do? We expect a new high to be made, which is what happened. This happened on 3 separate occasions today. We had all these trends that broke and they all followed the rules and made a new extreme, right? So we had an uptrend, we broke it, we made a new extreme. I'm showing you guys this so you can see like this isn't just any random strategy or people use indicators like no, this is real. The market respects these rules and it follows it. And like I said, it's almost like a guide, right? So once we had a break, we made a new high. You had a great long position here. Why? Well, we pushed above the EMA. We had this green candle here, trigger lower, trap all the bears, a nice close above the EMA, and we ended up making a new high. And as I said earlier in the video, as far as like where to enter, I'm gonna make a whole other video explaining entries, where to enter, how to enter the type of candles, to avoid the type of candles that are, you know, a green light to take with confidence. I'll just make a whole other video on that. But I just wanted to make this a little introduction to price action trading. This is strategies what I've been using for years now. I'm a full-time trader and it's once you master it, it's really consistency. I mean, just like any other strategy, there is loss, but once you perfect this, I would say you're gonna have an 80% win rate. Um, as long as you're disciplined, you don't chase, you just follow these rules. And in my opinion, this is one of the best strategies to learn. I will be posting videos um, daily or every other day, doing a market recap, explaining my trades, explaining the market, what happened. So if you guys are learning this and you're trading during the day, you can watch my YouTube videos later and you can just have a recap of what you did wrong. Maybe you did the right thing, you followed exactly what I did, and just understanding it candle by candle. So I'll keep you guys posted. Hit the follow button if you already haven't and subscribe so you guys can get alerts whenever I post new videos. And have a good evening, everyone. I'm out.